Running a business isn't easy. And there are a couple moments that I can remember just being completely overwhelmed, sitting in my chair going like, I don't know what to do, how to do this, where to begin. And today's episode, we dive into one of those topics, and that is bookkeeping and taxes. Now, this isn't one of those topics that a lot of people think about when they start a business because our focus is so much on revenue and sales and bringing in money. But if you don't track this, if you're not careful of how you do your bookkeeping, how you do your taxes, how you do your write-offs, you could actually spend more money or lose more money and not save as much money as you possibly can. It could also create huge amounts of headaches at the end of the year. You risk being audited and so many different things. So what I wanted to do is bring on an expert that could help you with bookkeeping and write-offs and kind of give you a mini education on what to do. I promise you this episode is filled with so many goodies that I wish I would have known when I first got started inside of business. Look, this is one of those subjects in business where most people aren't sitting down going, I need to learn this, but it is absolutely one of the biggest skills that you need to learn inside of your business because numbers are everything. Knowing how much you're spending, where it's going, how much revenue is coming in, where the revenue is going, how to manage it, where to make decisions from is one of the most important things you can do in business. So if you want to learn more or you feel overwhelmed with bookkeeping, well, keep on listening because this episode breaks it all down for you. So keep on listening.
Hi, I'm Brandon Lucero, and you're about to experience the new way to thrive in business, entrepreneurship, and life by leaning into who you are, what you love, and standing up for what you want to create. Get ready because this is where we go against the grain, say no to outdated society norms, and we say yes to change in order to create a happier, more fulfilled world. Welcome to the New Generation Entrepreneur Podcast.
Hey everyone, welcome back to another episode of the New Generation Entrepreneur Podcast. I'm super excited to have today's interview with you guys because it's on a topic that I think most of you need or should at least think about, discuss right when you start your business, but it becomes more and more important with the more money you make. And today we're talking all about bookkeeping, taxes, and all that good stuff. And I brought on an amazing guest to help us give us the lowdown, the information, all the stuff that you guys probably don't even know you need and also know that you need. So today we have Serena Shoup from Course Bookkeeping. And I'm really excited for the conversation we're about to have. So Serena, welcome to the podcast.
Thank you for having me. Super excited to be here.
Yeah, I'm really excited. We got connected through a mutual friend, Jill Stanton, and we just kind of kept in touch through Instagram and all that stuff. And I've just been following along, what you do in your posts and all that stuff. And I just wanted to have you on the podcast because I remember being a brand new business owner and trying to figure out like taxes and how to do all that stuff. And it was a nightmare. Like it was one of those moments where I just had this feeling in the pit of my stomach of like, I'm so overwhelmed. I don't know what to do. I don't know how to categorize things. I don't know what software to use. And then when it came to taxes, like I know everyone wants to limit their taxable income and there's right and wrong ways of doing it. So I'm excited to dive into it. But before we get going, do you mind just telling everyone a little bit more specifically about what it is you do and who you work with?
Yeah. So I mainly work with online businesses. So e-commerce, course creators, consultants, so people that, may work virtually. And I got into the course creation industry because I started mentoring other bookkeepers. And as I was making connections in the course creation and online business industry, people would be like, well, I have some questions about bookkeeping. Since you teach other bookkeepers, like, could you help me? And so it just kind of like fell into place. So it's really cool to be able to help an industry that you have really deep knowledge about. So it's like, it's not just the finance side of things that I understand, but how it ties into the marketing and the operations of running an online business. So when I mentor other bookkeepers and accountants, I always encourage people to really niche down because it helps you become really, truly the expert and be able to provide way more value to your clients. So practicing what I'm preaching there. And so I help online businesses with their bookkeeping and some people call it like fractional CFO services where we do some budgeting and forecasting, but we don't have to go all the way there. A lot of our clients are getting kind of the basics of bookkeeping and just kind of learning how to read their financials and understand their numbers and how to make pivots based on those numbers. And we try to break it down in a simple way for them every month and not overwhelm them. So it's been really fun to do that.
Yeah, that's amazing. And I think, when we get into business, everyone's always so focused on like, how do I drive sales and revenue and all of these things? And no one really tracks much beyond that. And sometimes they don't even track that very well. It's just kind of like, oh yeah, I have like a ballpark head of what we did this month. But after running a multiple 7-figure business for, 4 or 5 years now, the one thing that I have come, like the one absolute that I know is the numbers will tell you everything. Like I obviously work with people with messaging, and people go like, well, I don't know what my messaging problem is. I literally say, look, what are your numbers in the funnel look like? Like how much have you spent on ads? What's the cost per lead? What's your EPL? What's the conversion rate on the opt-in page? What's this? What's the show up rate? And I know those numbers aren't directly related to like bookkeeping and taxes, but it goes to show you how important knowing and understanding numbers throughout your entire business, because you can't escape the numbers. The numbers will literally tell you like where things are broken and stuff like that. So in your opinion, if someone's like just getting started, what sort of are the recommendations of what to be tracking, and how would they go about even doing that?
Yeah. So my number one recommendation, especially if you're just getting started, but even if you've been in business a while, a lot of people, quote unquote, get this wrong, is to make sure you have your business finances separate from your personal, because it's going to make it easier in the long run to be able to track your numbers. So if you're intermingling your personal bills with your business bills, or like money coming in from, if you have a W-2 job or, a day job, and you have your business, and you're just putting it all in the same bank account and trying to manage things that way, it's going to be really hard to track things. So keep it simple, make sure you separate those. So that's number one. And then the things that you should be tracking are obviously, well, maybe not obvious for everyone. For me, it's obvious, but not always for everyone. But money coming in. So if we break it down in a very simple manner, money coming in would be your sales, your revenue, whether it's from affiliate commissions, the consulting or coaching that you're doing, or digital products. And I also like to have people track those things separately instead of just tracking everything that comes from Stripe as one bucket and PayPal from another. Let's actually track it based on what the product or the service was, so you can begin to see like, where is the majority of your money coming from? And then same thing on the expense side. So tracking the money going out. How much are you paying for software? How much are you paying for contractors? And just breaking it down in a way that's going to help you make decisions. There isn't necessarily a complete right or wrong way of bucketing everything. There are some standards, if you will. And usually when you buy a software like QuickBooks or Xero, it comes with some pre-built categories for you, and you can fit things into those buckets, or you can change them and make it to where it makes sense for your business model. So
I know through my journey, basically starting from nothing to where we are today, there have been different levels of bookkeeping that I've had to do. Like I would imagine someone who's doing $1 million a year doesn't need the same thing as someone who's doing $50,000 a year. And I'm just curious, from your standpoint, are there certain revenue levels where you should be doing certain things and certain revenue levels where you shouldn't be doing certain things, or certain softwares to use? Like where's the line kind of drawn as you continue to grow?
Yeah, I would say it kind of boils down to like what's going to be most efficient for you. There's a lot of bookkeepers that love QuickBooks Online for pretty much any business, but I will say it honestly depends on your business model too. Like if you're a manufacturing business or have inventory and things like that, you're going to definitely outgrow QuickBooks Online. When it comes to a digital product business like courses or coaching, you can probably stay on QuickBooks for a lot longer than those manufacturing companies could, right? Because the business model itself is more simple. So looking at things from that perspective, and then understanding when things are like becoming inefficient for you. So for example, one of the biggest reasons why we don't use QuickBooks Online for our course creator clients, or any of our clients really, but mainly because of the course creation industry, is there's not a direct integration with Stripe, which is the main payment processor for most of our clients. And so it makes the process of recording everything with the gross sales, like the total price of your program, less the fees. When it comes from Stripe, it's coming to you after fees, but we want to see those split out so we can see exactly how much you're spending on processing fees. So all of that becomes very manual in QuickBooks unless you pay for a third-party app or something like that. So that's one of the reasons we use Xero, because it has a direct integration with PayPal and Stripe. So we can track all those things really easily and are really efficient with how we can process. So for instance, some bookkeepers will charge you based on your volume of transactions. I found with course creators that could create a huge fluctuation in your monthly fee, right? If you're launching one month and not the next. So what we do is we have a flat monthly fee. We don't increase our price based on volume because the program we use allows us to basically take almost the same amount of time to process 1,000 transactions that are all the same coming through Stripe versus 200 or 100 transactions. So we're able to stay really efficient and not have to charge extra because there's not a lot of extra manual work. So evaluating situations like that as you grow is really important.
Okay, that makes sense. You said something that I want to kind of tap into, which is the launching side of our business. I'll never forget it. I don't know what this might be 3 or 4 years ago, and I had a meeting with my CPA of like what our projected or estimated taxes would be for the final quarter of the year. And they told me, and I had Mel on the call. I was like, Mel, because I just switched CPAs, and I was like, Mel, can you just hop on the call with me and just see if this person knows what they're talking about? And, if they're, I like someone who's aggressive, but not dangerously aggressive. I don't typically like someone who just plays it super, super safe. And so I was like, Mel, can you just estimate, tell me what you think? So we get on the call, and this person tells me, oh, you owe $200,000 in estimated taxes. Like, what? I don't even know if I'm going to have $200,000 in the last quarter. How does that even make any sense? And she's like, yeah, based on revenue. And then Mel just interrupts and he goes, I know exactly what's going on. Brandon, you had a launch at September, which brought in $600,000 of revenue. She's estimating that you're going to do another $800,000 or $600,000 for quarter 6, but you're not launching again, right? And I go, no. And she goes, oh yeah, you owe $25,000 or so, something like that. I forget what the number was, but that's why it's really important. That's why I think why I want to have you on the podcast is because our business model in this course space is there's a lot of big months, low months, there's launching, and we have to sort of account for that. So when it comes to bookkeeping, even forecasting and stuff like that, how do you handle launches? Because sometimes you don't even really know what you're going to do in a launch. And so that makes sort of forecasting pretty tough. How do you handle stuff like that?
Yeah. So we sit down with our clients once a year. Most of our clients, not every level gets this service, but I try to at least offer it even as an upsell so that everyone has access to having this meeting with me and being able to do this work. But I basically give them a blank calendar and I say, here is a calendar for the next 12 months. Mark in each month that you're planning on launching. Hopefully this is quarterly, right? If you're following James Wedmore, you should be having a quarterly revenue generating activity. So I'll have them that's kind of where we start. Let's map out kind of what you expect to have for launches, and then give me the price that you're going to launch at, and give me what you expect or hope to sell. And we do a couple different scenarios because we want a conservative forecast, and we want to see what could we do if you hit these numbers? Because that changes everything, right? So we do a couple different scenarios. That way we have a baseline of this is the minimum you have to do to be able to cover all your expenses as the business is now, versus this is our big, hairy, audacious goal. And this is what you could do if you do this kind of launch. Which means maybe adding team or investing in a coaching program or something, or a retreat, right? So I have them also give me a wish list of what are the things that you need to implement this year or invest in, and then what are some of the wish list items that you would like to if you have a really good launch. So we can build a couple different scenarios based on that. I also ask them, because there's always context, right? So I could say here's the calendar. Put down what you want to launch, for the year and how many sales you want to get. But then I come back and ask questions of like validating those numbers. So, okay, like how big is your email list? What was your conversion rate from your email list last launch? So we can figure out, is this even realistic, right? All comes back to tracking your numbers. So it is still very important to track all those other metrics as well, not just financial metrics, in order to build your financial forecast, right? You need those. You need that history of like, what is my email list size? What is my conversion rate? Like if you're used to getting maybe 3 to 5% of your total email list into your program, well, now you have like a real number to work with.
Yeah. And this is why numbers are so important, guys. Like, like even to do the forecast, you need to know the numbers of everything. And I promise you right now, like if you guys are not tracking your numbers on funnels and your bookkeeping expenses and sales and where they're coming from, you're losing money. You just plain and simple, you're losing money. Okay. There's 2 different directions I want to kind of take us. The first one is I want to talk about the different levels of business and what your recommendation would be. Cause I know we kind of started off talking about bookkeeping, but then there's also CPAs, and there is a difference between the two. And I didn't know that when I first got started in business. And then I know that different levels of revenue, you're going to need different types of support. So I want to kind of go through that journey. And then I know one of my favorite subjects is write-offs. What can we write off? How do we lower our taxable income? Stuff like that. So just starting out, do you recommend everyone hire a bookkeeper, or do you think that's something that they can do on their own? Like, let's just say starting out means like under $50,000 a year in revenue. What's sort of your recommendation there?
Yeah, both. So it depends on your personality. If you know that, like, if you have pretty good attention to detail and you feel comfortable around numbers and spreadsheets and things like that, you can absolutely manage it on your own. Now, the other question is, are you going to? If you know yourself, like I know myself, even though I'm a numbers person, I'm also a CEO of 2 businesses. So I don't actually do my own bookkeeping anymore. I offloaded that to someone on my team so that it gets done in a timely manner. Because if it was up to me, that would be the last thing on my list because I have so many other hats I'm wearing. So if you're in that kind of position, then a good starting point, honestly, for anyone, even if you are comfortable with numbers and doing it yourself, is to have a bookkeeper actually set everything up for you and show you how to manage it, which you can generally have most bookkeepers do. They'll do, a setup for a fee and a couple training sessions or some level of support, for a limited time after. That's something that we do as well. We also offer like a quarterly support where it's like we can go in and check in and kind of look over things if you want to make sure you're doing it correctly. And I won't be shy about telling someone like you're having the same mistakes every time. It's time to just outsource this. Things like that. So I would say like typically clients come to us to have us handle it, start to finish. When they hit about 100,000 in revenue. Before that, they're managing it on their own. We might have a little bit of a cleanup to do if they have been managing on their own, but it's doable. So I hope that answered the question. Like there's definitely different options.
Yeah. And that I want to keep going through the different levels, but like, what's the difference between, because we're talking about just bookkeeping right now. And then there's the tax side of it and filing and all that stuff, which is more of like when you would probably need a CPA or an accountant or something. Is that correct? That's mainly the difference between the two?
Yeah. So bookkeeper is going to manage the day-to-day. So sometimes depending on your business too, I know this doesn't really happen in online business because we pay for everything like on a subscription credit card. But in other businesses, you might have your bookkeeper actually paying bills for you, or invoicing your customers if you have that type of a business model. So definitely figure out what you need and what kind of bookkeeper you need. Or if you're meeting with bookkeepers, ask them like what level of service they provide. For us, we don't invoice customers for our clients. We don't pay bills on their behalf, but we enter the information after the fact, after it's happened, which works well with online business because we don't really do like bill pay in online business. So everything happens real time. So that's one level that the bookkeeper can do. But yeah, generally a bookkeeper is going to handle managing the day-to-day transactions, entering them, reconciling the bank accounts, which is just a fancy way of saying what's in our QuickBooks or our Xero matches what's on the bank statement. We've captured every single line. So a lot of people are like, what does reconcile even mean? So that's what it means. You're just matching what actually comes through on your bookkeeping software to what's on the bank statement. So that's what a bookkeeper is going to handle. An accountant, this is another one of those terms that's kind of interchangeable. In some states, you're not even allowed to call yourself an accountant unless you hold a CPA license. Other states are not as strict on that. You could be called an accountant if you just have an accounting degree, which doesn't necessarily mean you do taxes. So that's one of those, industry jargon type things that there needs to be more education around it. So I try to talk about this a lot too. It's like, and there's every different levels of bookkeepers and accountants, right? Like not every bookkeeper is created equally. Not every accountant or CPA is either. But in general, if someone is considered an accountant, the general knowledge of, the general public thinks that an accountant will be doing taxes, and some may and some may not. Like for instance, this is another thing, like I'm technically a CPA. I hold a CPA license in the state of Arizona, but I don't prepare taxes. That's just a decision that I've made, right? My business is more on the bookkeeping, finance side of things, operational type stuff. So that's another thing. Like I used to get a lot of people coming to me asking me to do their taxes because I had the word CP or the credentials CPA in the name of my business. And then I realized this isn't actually what I want to be doing. And it's kind of attracting the wrong people. So I scrapped that, did a rebrand, and but I do hold a CPA license, which really does provide more value for my clients because I do understand some of those tax nuances that help when you're doing the bookkeeping. It helps to be able to point out we should handle this differently, or this is something you should definitely talk to your CPA before the end of the year so that you don't end up in a situation, right? Whereas not every bookkeeper is going to have that background knowledge either. So the accountant / CPA is going to generally take the information that the bookkeeper has, entered into the system and create meaningful reports and or file taxes. So,
gotcha.
Yeah.
Okay. Makes a lot of sense. Going back to the different levels. So I think you recommended around 100,000 when you recommend the bookkeeping, probably should just offload it and stop doing it yourself. I think that's right around the same time I think I was probably below. I was just I don't understand this at all. My brain just did not work around bookkeeping. I was I could not figure this out at all. But does that change? Let's say on our journey to $1 million, is there other bookkeeping sort of things you need to take into account? Let's just say you offload it to someone at 100,000. Do you really need to worry about it? And when you get to $1 million or 2 million, or is it the process pretty much stay the same?
I would say one thing to be aware of as when you creep up around $400,000 to $500,000 in revenue, it is sales tax, especially if you have a physical goods component. But even now with digital goods, it is a thing where a lot of states are requiring sales tax on digital products. And each state has their own definition. So I'm definitely not going to go through which states are which. Right. Arizona is definitely one of them. But the other thing is in order for that sale to be taxed with sales tax, it has to originate, or the customer has to be based in the same state that has the digital goods sales tax. So you may not hit thresholds until you get to that level of business where you're hitting $400,000, $500,000 in revenue. And then at that point, I would say it doesn't have to be your bookkeeper. You could engage a different provider. You can engage a CPA. You can engage someone like Avalara, which is a company that does this, to do a sales tax analysis just to make sure that you're still kosher, and then kind of give you a list of states that you should keep an eye on because you're creeping up on their threshold. So that's one thing that you would want to be aware of. The other thing is as you start growing your team, you may or may not need a different level of bookkeeper or a payroll provider, right? Sometimes you outgrow that kind of situation, you may need HR support, which a bookkeeper's not going to do, but some of the payroll providers do have that as an added service. So those are kind of the two main things of like continue to be aware of. And then of course, being able to like create forecasts and manage your company to a quote unquote budget. And I know people hate that word, but it's really important to understand how much money your company is spending just to survive and how much money you need to be able to bring in so that you don't end up having to lay off people and getting into a sticky stitch situation. So I would say clients tend to right around 300,000 to 400,000 get to the point where they're like, okay, I think we need to put together a budget, a couple different scenarios because we're not really sure how this year is going to shake out. And there's been a lot of uncertainty in the past few years. The economy is starting to like level out. People aren't seeing necessarily the same volume of sales that we were seeing during COVID in our industry. And it's freaking people out, especially if they started in 2020. They're like, what's happening? And it's like, well, things are just normalizing now.
Yeah. It wasn't normally that easy.
Yeah, it wasn't.
Makes a lot of sense. So one of the biggest shocks that I had was maybe it must have been like 3 years ago. But my CPA was like, hey, we need to know, because I started to bring on, actually a lot of my staff like moved. So it was actually, I know exactly when it was COVID because we shut down the office. So they weren't tied to a local spot because we were all in California. Then they all like scattered. So we had people in like Utah, and then some of them moved to Colorado, and then I moved to Arizona, and then we still had people in California. So we have employees in like 4 different states. And it's been the biggest pain in the ass when it comes to like bookkeeping and taxes because of what you're talking about. Like there's the sales tax, but then my CPA wanted to know how much of our revenue came from people in Colorado and then in California. I'm like, I don't fucking know. And they're like, well, you got to find out. So now I'm like downloading PayPal IP address things and zip codes and seeing if I can find out people's zip codes and like numbering the zip codes. I mean, it took me hours and hours and hours because we weren't prepared for that. I didn't know I had to do that. I didn't know that that was going to be a thing when people moved out of state. Had we just had the books in order from the beginning, it would have been a much easier process. But these are, like you said, like around 300,000, 400,000, 500,000, you're probably going to start hiring people. And I'm just going to tell you guys, just hire people in your state. It makes it so much easier from that sort of aspect. But I would imagine that's something you guys are doing as well for clients too, right? Tracking like all of that stuff, like the employee and where the sales are and percentages and stuff. Is that an important thing to be tracking?
Yeah. So yeah, for the majority of our clients, they're still kind of below that area where it becomes more of a problem. And again, it depends on the state because some states want to apportion some of the income based on if you have boots on the ground. And some states don't. So it really depends on where your highest volume sales are. So you kind of start there of looking at like, okay, so our top states for sales are usually California and Texas, right? For most companies, because they're the biggest states, maybe New York, areas like that. But yeah, so definitely have a way to at least pull that data if you need to. It's not something that you're necessarily going to be recording in a bookkeeping software, but you want to be able to have the ability to pull that information in a spreadsheet for, they call it income apportionment. So you have the IRS that you pay income taxes to, which is federal. And then you generally pay state income tax wherever your company is based. If it's a tax state, like Florida and Texas don't have income tax. So if you are based out of those states, you may not owe a lot of income tax, but if the majority of your sales are actually in another state that is taxed, they might want to cut.
Yeah, that's exactly what happened. I was going to say, I was so mad when my CPA was like, why do I have to do this? And that is so stupid. And like, well, sorry, we need the information. And I'm going like, I mean, because we have like thousands and thousands of purchases per year. And I'm like going through every single one, trying to figure out like the state and stuff like that. It was a big hassle.
A lot of that too, it might be same with the sales tax where your CPA or your accountant is going to do this analysis, but it doesn't necessarily mean that you have to choose to pay tax in that state. you could take a position, but it's more about being informed on what your options are and what the risk is and what the tolerance of that risk is that you have. Because I have done those sales tax analysis with clients where it's like, okay, technically, like you are pretty much at the threshold to be collecting sales tax in this jurisdiction, but it might be very low dollar, but it's based on a volume threshold. And so when you look at the dollar values of it, it doesn't make sense to go through all the paperwork, the time, the effort, you paying me to set all that up, to then remit $100 a month to that state. Let's take the risk. And if they come after you, you'll pay the penalties, the back taxes, and it'll still be less than what you would have paid me.
Yeah. Yeah. We've done stuff like that too. Because you're right. Like if it's very minimal, like it's probably not even worth their time to come after you anyways, you know, like for $100, $1,000, even if it's like a couple thousand, it's usually not always worth their time to do that sort of thing. I would love to move the conversation, because this is one of my favorite topics, is like write-offs and lowering our taxable income. Because there are so many things, especially for us that like work from home, that we could be doing, between like leasing and buying cars to writing off room and rent, utilities, like all of that stuff. So let's just start at the very basics of, for those people who may be brand new and don't really understand what a write-off is. I think there's misunderstandings of what write-offs are as well. Like I think people go like, I'll just write that off, and they act like their entire purchase is like coming back to them. And like, that's not really the way it works.
Yeah, it's not a tax credit.
Yeah. Can we just explain what that is real quick?
Yeah. What comes to mind every time I start talking about write-offs with people is that scene from Schitt's Creek where what's his name is like, it's a write-off. It doesn't matter. It's a write-off. Yeah. And she's like, do you even know what a write-off is?
Yeah.
So yeah, a write-off is basically something that's going to reduce your taxable income. So for example, one that's probably easy to wrap your head around is, your software fees, right? The money that you're spending on Kajabi and whatever else, right? Different email service providers, right? So that expense is directly related to you delivering your product or running your business. And so you reduce the revenue that you have come in by that amount, which then gives you a net profit or a net income on your bottom line, if you just take it very simply, which is basically your taxable income at the end of the day. So that's stuff that's pretty straightforward going through your business. So if you're majority using it for your business, like your cell phone, your internet, obviously like any equipment you buy for your business, your microphone, your computer, things like that, definitely a business write-off. It makes it easier to support that as a business expense if you run it through your business account, hence having a business account or a business credit card. It's just easier to support that. And so those are very straightforward expenses. So anything that you're using in the course of your business that is ordinary and necessary is the wording the IRS likes to use. So something in one industry might not be ordinary and necessary in another industry. For example, one of the examples I like to use is our industry, because we're online. We literally don't tend to meet clients in person, although that can change with hosting retreats or events and things like that. But if you aren't doing those types of activities and you're not doing anything in person, supporting running like a car lease through your business is going to be a little bit harder because it's not really necessary technically. You can absolutely take a position, but definitely document your position. And that's one of the things that, like, if you are working with a more aggressive tax pro, you want to be able to say, okay, like, number one, are you going to be with me if I get audited to support this? Or does your support basically end and I'm kind of on my own? So that's one question you want to ask, especially if you're taking aggressive tax strategies or tax positions. The other one is like, are they going to help document the reasoning behind that? Because even if it's just like literally like a memo, right? Like You write in a piece of paper, like, this is why we took this position. This is how we can support it. This percentage of our business is done in person, where we're traveling to teach at retreats or teach at events. And we're driving instead of flying or whatever, right? So you just have to kind of outline the reasons why it's reasonable and necessary. Basically with any position like that. As far as home office stuff,
I would say it makes a lot of sense that even with the car stuff, I think a lot of people just get a lease and then they just write the whole thing off. But even then, it's technically, like, if you're doing it correctly, if you use that car for personal reasons, you can't write that off. So like for us every year when we have 2 car leases, and then what we do is I just let them know, like, this percentage and this amount of miles were for business and this amount were personal. And just like be smart about what you guys are doing. Like if you're just saying 100% of both of my cars I'm going to write them off. Like you're kind of an idiot, because it's like, what, you're just telling the IRS I never used any of the 2 cars that we have for personal like you're just being so dumb. It's like an automatic trigger so like be smart about what you're doing with those things and document. And like what Serena's saying is just, if you do get audited, you need to be able to prove it. So make sure you're setting things up. But then the house is another very common one, especially for us. So how would you go about home office and utilities and stuff like that?
Yeah. So I guess this goes even if you rent, but if you own your home, there's like a standard home office deduction that you can basically take without having to prove how much space you've used for business in your home, which is it may end up being a lot lower than if you do have like a full studio in your home or an area that is like a large portion of your home that you're using for business. So keeping track of, and this is one thing that my tax pro told me, she was like, take an actual picture of your office. So it's like, this is a picture time-stamped, January 1st of this is how the office was set up. And like, you can see this is like, it's very good proof, right? But you keep track of obviously the square footage in proportion to your home. And then because it's a portion of your home, so if it's like, I don't know, 10% of the square footage of your home, I don't know if that's high or low, but if it's 10% of the square footage of your home, you can also take 10% of your utilities, 10% of your mortgage interest, not your mortgage payments, or 10% of your rent if you're renting, and make that a business expense. That's something that isn't necessarily going to show up on your P&L or your income statement for your business, but it's something that gets like added after the fact at tax time. So you might just keep a spreadsheet of these were my monthly utilities. This was my monthly mortgage interest, and give that spreadsheet to your tax pro along with your business profit and loss. Unless you want to put that on your P&L, but it will definitely reduce your profit.
Yeah.
So,
yeah. And that's the thing I want, everyone to realize is like, if you do 100,000 in revenue, you're only going to get taxed. You should only be taxed on your profit. That's kind of what write-offs do, is they limit all of that stuff. But then also at the same time, if you're like going right off hungry and you're just going crazy, you're not going to have any profit left either. And so that's why we were kind of laughing before, because people just act like, oh, I'm going to spend this on the business and then I'm automatically going to get it back. And it's like, no, it just lowers your taxable income. It's not like you just get that money back, which is, in Schitt's Creek, that's what he thought. Was like, don't worry, we get it all back at the end of the year. It's like, no, nope, that's not how it works.
Yeah. It's not a tax refund.
Yeah, exactly. So what are some other like common things that people can write off that they may not know, or things that they think are write-offs that are not? Like one of them, for example, I know they recently changed gifts and things like that. Like last year, I gave some gifts to different clients and even employees for certain things. And then my CPA was like, yeah, we can't really write those off anymore unless, I forget what they said. And they said, because if X, Y, and Z. But what are some of these like common misconceptions of things that people think are write-offs that aren't really write-offs?
Yeah, gifts is a good one to talk about. You can deduct up to $25 per client per gift. So for instance, when we sign on a client, we send them a beautiful curated box that's like personalized and it's branded to us kind of. It doesn't have logos on it, but it's like got our colors and things. It's just like a welcome gift. It's $100 some odd. And I know that technically that's not going to be, I'm not going to get the full write-off, but it's worth it for the client experience. So there's some things that you have to just go into knowing like, this is going to come back tenfold or whatever. This is worth it for my client experience, even if I can't take the full write-off. There's other things that technically could end up as marketing instead of a gift if you do have it branded with logos and things like that. Another misconception, and this kind of falls into that category, is clothing. Especially in our industry, we all like to do our branding photo shoots, right? Where we're like all dolled up and we have our brand photos done. The photo session is deductible, but what you buy to wear for that photography session, if it can be worn in an everyday situation, i.e. doesn't have a logo on it, so like anything that you would normally wear, even if it's not something you would normally wear, if any person would wear it, it's not a write-off. Like it's, you can't technically. Again, you can choose to take that position. That is your prerogative. But when it comes down to like, if you were audited, which also the chances aren't always high with that, if you were audited, you would have to prove that like, oh, it had my, of course, bookkeeping logo on it. It was a polo shirt, right? If you can prove that, it's basically a uniform and that is deductible. So little things like that where you can, you could tweak it a little bit to make it marketing where it's like, okay, if we put our logo on it, then it's not a gift, it's a marketing material. Or if it's materials that support the learning, so a workbook or a journal that's branded or whatever, some pens that are branded, but this is like going along with the course, that could be considered either marketing or cost of goods sold because it's something that goes into the delivery of the product.
That's what I was going to ask, because for every student we do send a box out that has like a workbook and it has like branded like affirmation cards and stuff. And I've always written that off, and that because I always, like you said, it was like a cost of goods. It was a part of the purchase. That's totally fine, right? Okay, cool.
Yeah, absolutely.
Awesome. Makes a lot of sense. Okay. Now going back to the clothing thing, like, let's say, does it also depend on the type of business? Because if someone was like a fashion stylist or something like that, I would imagine our clothes being able to be written off at that point, or is that still like a no-go?
I think that's probably a gray area still, just because there's been some changes with like types of businesses that are out there. So if someone has already like appealed it and made a case and there's like case law around that, then you could probably refer to that case law and be like, and that's where it just gets into tax law and like legal stuff. But for instance, like even the online course creation industry is fairly new. So there's a lot of stuff that probably hasn't been established yet. And unfortunately, someone's going to have to get audited and get it established.
Right.
So
let's hope that's not me or you or any of the listeners. Would not like to be used as an example, please.
No.
Okay. What about like meals, entertainment, stuff like that? Because I know the rules in the last like 5 years have changed on that as well. What does that look like nowadays?
Yeah. So during COVID, they made meals 100% deductible, which in the past, 10 plus years, they had only been 50% deductible if it is related to meeting clients or providing meals for your team during like business hours or like a team lunch or whatever. If it's directly tied to an event that you're putting on and it's for the customers, that's, I believe, still 100% deductible. But if it's like internal stuff or meeting with clients and it's not part of a whole event situation, it's 50%. And then you have travel meals also. So as like, if we're talking about categorizing things for bookkeeping, you would probably, if you have spend in each of these categories, you would want to have these 3 categories on your QuickBooks: travel meals, meals 50%, and meals for events. because they're all treated differently. And then you can provide that detail to your tax preparer and say, here's all the different types of meals, do what needs to be done with them. But travel meals are 100% as well.
That's really interesting because even in our bookkeeping, it's just meals and that's it. Like we're not dividing them up. So I don't know how and
it might or may not make sense to spend the time dividing it up if there's not a lot, but it might be worth it. And it'll make it easier on your tax preparer and they won't have to ask you the question, like which ones of these meals were during travel and which ones weren't, type of situation.
Yeah. And usually that's why like looking at your books every month and doing it every month is super smart, because if you just wait till the end of the year, it's like, are you really going to remember what a meal was on like January 15th at the beginning of the year? Like probably not. So you're just sort of like guessing. And then obviously if you get audited, then you're going to have to like prove and all that stuff. And it's just a big freaking mess.
The best thing to do in that situation too is when the meal happens is keep receipts for everything, honestly, but especially meals. On the receipt, document what the purpose of that meal was, and if you were meeting with a client or if it was a team meeting and who was present. And then if it was travel meals, you're like, just travel meals, you write on that. And then you can go back later and not have to remember. But that's what I do. And I snap a photo of it immediately in the restaurant. Like as soon as I write the tip on it, I write on the receipt too. And I snap a photo of it and then I just leave it there because I have a digital version of it.
So when you do the pictures and the receipts, does it get uploaded somewhere?
I use an app called HubDoc, and this is something that we give to all of our clients too. It integrates with Xero, so they can use it on their phone. There's a special email address that you can forward receipts to from email as well, or you can log in and upload things. But yeah, I use the HubDoc app. It immediately saves it into a folder based on the vendor name and pulls all the information off it, like the amount, the date, and all that stuff, and then allows us to attach it into it, like automatically attaches into Xero when we process it in. So
Gotcha.
It's attached to each transaction. Yeah.
Gotcha. Smart. Really smart. Okay. Is there any other last things on write-offs before we wrap up that you think we should address that we haven't addressed yet?
I'm pretty sure Mel has talked about some of the write-off situations too. And I know basically the only thing I really want to cover is like, there's definitely some TikTok tax advice out there that may be valid and it may not be valid, and it might be valid, but also not worth the effort. So it's like, don't cut off your nose to spite your face. Just like you were saying before, don't like invest in a bunch of stuff just so that you don't have a taxable income, because then you also don't have any money left to pay yourself. So if you're owing taxes, that's actually a good thing because it means you're making money. So don't try to just spend in your business just to completely reduce your tax liability unless those are actually necessary things that you need in your business.
Right. I would say, and correct me if I'm wrong on this, I think the approach to take is you obviously don't want to have to pay more in taxes than you have to. So like be educated and smart on what's a write-off and what's not. Like document it, because if it's not documented, you're going to get taxed on that money. But at the same time, don't go gung ho because to try to like not pay taxes. Cause like what Serena said, if you're not paying taxes, you're not making any freaking money. So you got to kind of find that balance there. I did actually have one question that kind of popped up into my head with like IRAs and stuff like that, and paying like your kids on payroll and stuff. Are there any, what do you recommend on that sort of front? Because I know there are things, I know you can put your kids on payroll and stuff like that. What are some of the little things you can do there?
Yeah. So I actually have my teenage daughter on payroll. She writes thank you cards to my students.
That's cool.
And various other little tasks. And so that is one strategy. It's not a huge write-off for me, but it helps because I'm paying for her gas and her food anyways. So it like kind of helps offset that. So it's like now I'm actually just paying her through the business. She's actually doing some work. So you have to document their tasks of what they're doing, have them track their time and set it up like you would a regular employee. But if they're under 18, You don't have to withhold payroll taxes, Social Security, Medicare, any of that. I believe, yeah. So no income tax and no FICA, which is Social Security and Medicare. So she, when I pay her $75 every 2 weeks, it's not that many hours of writing thank you cards. It's straight up $75 deposited into her bank. Whereas like when we pay ourselves on a wage, you get payroll taxes taken out. The caveat I will say with this strategy is I believe you can only use this strategy if you're not an S Corp. So it also depends on your business setup, your legal setup of your business. The other question that you had is IRA, and that's the retirement situation. That's generally an area that if you're an online business and you have the cash flow for it, you should absolutely be taking advantage of setting up either a solo 401k, a SEP IRA, or something, so that, because as a small business owner, the general public, a traditional IRA, you have a limit of how much you can contribute, and it's pretty low considering it's like $6,000 a year or something. But if you are a business owner, you can take advantage of small business type situations like doing a 401k or a SEP IRA. And your limit there's still a limit, but it's more tied to the percentage of your business income. So I think the SEP IRA, it's like 25% of your net profit you can contribute up to like $55,000 or something. So it's still limited, but $55,000, if you have that much cash, is a lot better than saving just $6,000, right? And that isn't going to give you a $55,000. If you're able to contribute $55,000 to your IRA, that's not a $55,000 dollar for dollar write-off. So if your taxable income is $100,000 and you contribute $55,000 or $50,000 to an IRA, you don't reduce your taxable income dollar for dollar. It reduces, it's an after your taxable income type of situation, and the percentage of your tax rate gets applied. And so it's not a huge tax savings, but it is you are saving for your future. So that's a thing that's worth it. You know what I mean? So if you have the cash, do it.
It'll be, if I can't remember the way it works. So again, correct me if I'm wrong on this, but let's say you put that $55,000 into like a SEP, and it grows to 100,000. It's like 55,000 of taxed money already, but you made 45,000. That 45,000 in profit though is not taxed. Is that correct? When you pull it out?
Correct.
Okay.
Unless you pull it out before you're supposed to,
right, which I think is the age of 65. 65 is okay.
65 and a half or something like that. But yeah.
Yeah. Okay. Makes a lot of sense. All right. Well, Serena,
so
I
it's
appreciate
tax-free growth.
Gotcha. Awesome. I appreciate you coming on to the podcast and sharing all this with us. Again, it's one of these topics that I think a lot of entrepreneurs want to avoid and don't enjoy talking about. And it's can be scary. And some of you may be feeling that right now, where it's like, oh my gosh, how do I set this up? What do I need to do? I mean, when I got into business, it was like, can I just let me market and sell stuff? That's already hard enough as it is, let alone learn all of this stuff. So hopefully today was a little insightful, helped you guys kind of figure out what you need to do, when to do it. Honestly, this industry, this area that we're talking about today is one of those things where I'm like, it is a necessary expense inside of a business. It is one of those things, if you try to do it on your own, the likelihood of you screwing it up goes through the roof. The likelihood of you making really costly mistakes that are going to cost more than what it would have been just to hire someone to do it is probably pretty high as well. So Serena, if someone wanted to reach out to you, contact you, work with you, follow you, all that good stuff, where can they go?
Yeah, our website is the best place to start, ofcoursebookkeeping.com. I'm also on Instagram at ofcoursebookkeeping. I'm also on LinkedIn, Serena Shoup. So any of those places you can reach out. You can fill out an interest form if you want to just kind of put your name on a list for me to contact you and set up a call. I'm happy to do that as well and just help you answer some quick questions that you have. And I will tell people, you do need a bookkeeper or you don't need a bookkeeper. Or if you have a bookkeeper and you have some questions about like, is my bookkeeper doing things correctly? Like, how can I trust this? We can jam on that as well. I just want to make sure everyone's empowered to take, to be good at overseeing this process, even if you don't know how to do it yourself.
Yeah. It's also one of those things where it's like having an okay understanding can help you out in the long run. Like for me, I have an okay understanding of how things work, which means when I talk to my CPA, I can understand and see. And also when I talked, if I want, because we did go through a period where we had to find a new CPA, because I was just like the one that I had, I'm like, I can just tell like there's something off of this person. They're either like being super lazy. They're not asking me the right questions. They're not being like, there's things that I'm doing with my own research to find out that should have been a tax write-off and they missed it. And I'm like, okay, so when you go to interview people, having a decent understanding of stuff will really help you like find the right people to help you as well. So
yeah, if any of you are wanting to do your own bookkeeping and would like to have a guide on what steps you should be taking, if that is your route, I do have a free guide. It's at ofcoursebookkeeping.com/guide, and you can download your copy there.
Serena, thank you so much. I appreciate you coming on and sharing everything with us. And so for everyone else, all the listeners out there, if you guys have not left us a review on iTunes, I would absolutely love that. I love reading every single one of them. And hopefully you guys enjoyed today's episode. So if you did, come back next week. We got another episode for you, and I'll see you all next week. Take care, everyone.
Hey guys, thank you so much for checking out another episode of the New Generation Entrepreneur Podcast. If you enjoyed this episode, go below, hit the subscribe button, and make sure you click on that bell icon and get notified every time we drop a new episode. Now, if you're looking for the show notes, we have them linked underneath this video, as well as our social media handles and some links to free training and offers that we drop from time to time to help you guys even further. So go check those out if you're interested, and thank you so much for tuning in to the New Generation Entrepreneur Podcast.